Morning, everyone. It's a Sunday morning. It's not easy for you to join our meetings. So today's topic is quite easy, why the crypto bull market continues. So as we will navigate the landscape, dynamic landscape, we need to understand the driving forces behind the crypto markets and also the opportunities that lies ahead. Okay, so I think the key aspect of behind the crypto market is definitely the macroeconomic. I think which is drawing key notes on the Trump's policies recently. First of all is immigration policies. So Trump has a harsh immigration crackdown. So it will be equivalent a loss of nearly 1 million workers from the US. And also the second is Trump has imposed a very severe tariff policies towards all the trading partners. So all the trading partners have now in the negotiation process or have a retaliation process with the US. And also the Trump's tariff policies have heightened the volatility of US market. And also this Friday, China has imposed a countermeasure policies against U.S. strategies, which will be effect in April 10th, which are adding 34% of the duties on the U.S. goods imported. So this will causing a chaos in the crypto market and also in the traditional market. Also, we see the first aid policies will include physical policies, and there will be a tax rate of 100 billions and also dodgy in spending reductions of approximately 105 billion per year. And also, Trump administration has also launched a crypto-friendly policies with covering topics from the Bitcoin reserve, also the OCC relaxation regarding the banking services, and also the SAB reductions. So if you look at the Trump policy timelines, the anti-growth, immigration, and tariff measures will be implemented first. So that's causing the volatility of the market now. And maybe it will continue to the second quarter and also the third quarter. But the pro-growth policies will be implemented on the fourth quarter, especially on the tax cuts. So it will be having a positive effect on the total economy. And also, the policy uncertainty has increased to a historical high since Trump took office. On the left side, we can see the U.S. economic policy and trade policy uncertainty climbed to an all-time high. And also, markets are worried about that the U.S. effective rates, tariff rates will be soar to a new high post-World War II. And also, the policy uncertainty has an impact on the soft data. So the tariff frictions have led to a significant deterioration in the soft data of entrepreneur and also the consumer confidence. So from private department, the consumers will have a lacking of consumption intense because of the expectation is low. And also the entrepreneur confidence, they have delayed their decision on the investment, also the capital expenditures. But if you look at the data in another perspective, the hard data such as employment, consumption, and also business spending still remain resilient. So that means currently only the confidence has been impacted. But actually, if you look at the hard data, the employment rate, the non-farming payroll are still stable. And also, some sell-side companies like Goldman Sachs and also Morgan Stanley has lowered down their estimate for the 2025 US GDP growth from 2% to 2.5% to a level of 1.5%. And also, we see the biggest gap since the beginning of this year is the collapse of American exceptionalism, which we see the macro pessimism recorded its second largest 1 month increase since 1994, And also, investors are pulling off their money from US stocks in record numbers, with allocation to US stock down 40% month to month. So that's why we see the US market is so volatile recently. And also, we see why we need the tax cuts. So tax cuts and the deregulation in the second half of this year could still happen. Because US physical deficit remain high. If you look at the number between the primary deficit and interest, the interest will be going higher and higher. So that's why the US government is now focusing on reduct the government expenditure recently, and also the Dodgy Efficiency Act. So if this will be solved, and the U.S. physical deficit will still can be solved, and also we see the U.S. public debt sustainable issue will still remains. We didn't see any effect method to solve the problem, but actually Trump administration is having a lot of measure on it, like Dodgy, like also the tariff, and also other kind of things to adding the revenue from U.S. governments. So I think animal spirits will still be spurred at the next half of a year. If you look at the crypto markets, from a negative perspective, the BTC sentiment indicator turns extremely bearish. The 7-day BTC optional risk reversals has been triggered a negative 2 times standard deviation. And also we see from the future market that open interest for the BTC futures on major exchanges has declined 25% compared to 3 months ago before the election happens. But however, we see the sentiment has been signaled some positive signs. The first is, in this cycle, investors have been bearish regarding their BTC funding rates on PERPDEX on mainstream exchanges. BTC funding have been lower than the short-term treasury yield, and about 4%. So in this cycle, every time that the BTC funding yield lower than the future funding rate, lower than the short-term U.S. treasury yield, may signal a market bottom. And also, we can look at the BTC market. Everybody talk about the outflow from the ETF market, but I have to say that more than 1/3 or nearly half of the BTC ETF funding are coming from the arbitrage players. So recently, we see that the contango of the 3-month futures of the CME futures have been falling to the level of 2022 October levels, which means there's a much more slow and a thin level for the future arbitrage activities. And also we see, along with the price correction of the BTC ETF outflow are coming along with the future basis coming down. So we can see that recently the outflow of the ETF are mainly caused by the arbitrage between the BTC futures and the BTC spot ETF. So there's no clear sign that 4-year cycle of BTC will be impacted. And also in this cycle, everybody may notice that the BTC has been purchased by the ETF and also by the MSTR by nearly $60 billion US dollars. So this is new drawing powers for the BTC price. And also, if you look at the BTC holder sentiment, we will see more brighter pictures for the BTC holders. The first is long-term holders start to sell less at the bottom. If we can look at these pictures, the long-term holders are selling or distributions in the red area, in these 2 red areas, around 2 million BTC. And also in the green area, long-term holders are accumulations. So I've been selling 2 million BTCs, but also they are accumulated around 1 million BTCs at the same time. So now they're still in the mood to accumulation, not to selling it. And also if you look at the short-term holders, they're their near-term earnings have been going to a historical low, which means the short-term holders for the BTC, they are not losing more money. So their money, their profitable courses for the BTC will be reversed in the future. So that's why we see the BTC holder sentiment is showing a very good sign of reversal trend. And also, if we're talking about the future monies, so different kind of incremental funds. The short term, we have listed companies, MSTR, ETF, more than 70 listed companies purchased BTC this cycle. And also MSTR has its toolbox, Strike and Strive. And in long term, you are still talking about the strategic Bitcoin reserve, which will have a potential buying power of a million BTC in the next 5 years. So still in the discussion between the parliaments, Congress of the US. Also, we look at the ETH. So there may be some reform dividends. So people can see more insights from Vitalik in our Web3 festival these 2 days. But in our perspective, we'll see positive from ETH coming from the technology upgrade with a Pactra upgrade maybe in the second quarter of this year. And also approved ETH stakings this year, which can be quoted by the BlackRock's head of digital assets saying that staking of ETH could be a huge step change for the Ether ETFs. And also the potential paying taxes from layer 2s to layer 1s. And also recent government changes for ETH, and more focusing on the technical background. So the recent senior executive, Wang Xiaowei and also Thomas, they are both technical backgrounds. So the final question for the ETH will be, when will deflation returns? We can see from after the merge, ETH is experiencing a deflation period, but starting from March last year, it's going to inflation. So we need to pay attention to the lines when the supply of ETH will be reduced in the future. Also, DeFi is very promising. So DeFi will be supported by 2 factors. First is sustainable buyback support over time. So recently, leading DeFi projects have started to implement buybacks, which will provide a robust support for their token price. And also, this including the notable projects like RV, Jupiter, and also the new entrants like Hyperliquid. So we anticipate that their increased revenue potential will make an impact for buybacks even more significant in the bull market. And also, it will be supported by RWA new narratives. So why RWA? First is because of institutional targeting. With RWA have been emerged as a key allocation direction for institutional investors. So asset managers like BlackRock and also Fidelity has started to focusing on the RWA sector and have launched related investment products. And also we see the RWA interest will also appeal for the investors. The stablecoin of most real DeFi protocols have dropped between 2% to 4%, while in the contrast, the yield on US bond within RWA can remain above 4%. So this shift positions RWA's assets as a new yield source in DeFi, attracting a significant capital into the sectors. Also, stablecoin sectors, the market is expanding rapidly. Stablecoin play a vital role in payments and also cross-border remittance. And that is the foundation of decentralized finance and blockchain applications. And also, it will be an alternative for the unstable local currencies. Also, major players are eyeing on the stablecoins because of stablecoins' high efficiency. Companies like PayPal, Stripe, Robinhood, and also Visa have played a role in this field. And the stablecoin transactions volume has surpassed Visa volumes in the last year. Also, not to mention its ultra low cost compared to the bank-to-bank transformation. So for all layer ones, just 2 examples. First, Ripple. It has a technology upgrade, its sidechains, and also ecosystem expansions. Also, Ripple launched its stablecoins RL USD, which will be launched last year. And also the regulation and the government turning points for the Ripple We have already seen that ICC will drop the lawsuit with repos, which will be giving a lot of rooms for the repos. So we're changing the market mindset from a pure tokens of high-risk asset to a compliant payment instrument. Also Solana. Solana also maintain technology leadership in the field. We can see the economy is still strong with the TVL maintaining high level historically. Also the US easing and institutional funding will pumping up the whole ecosystem. We have already seen Solana CME future already been approved. Future ETF have also been approved and also the spot ETF are on the way. Other events, we see many tokens have been applied for its spot ETF in the US market. Litecoin, Solana, XRP, Dogecoin, Harbor, Polkadot, Sui. So we will see at least 3 of the tokens will be approved spot ETF this year. Also, we cannot ignore the relaxation of the regulation. The banking and the financial regulators have relaxed about crypto assets. The SAB 121 have been redeemed. Also, the ICC Crypto Task Force has a 10 tasks focusing on relaxation of the crypto industry. And also, the OCC attitude is now clear. The banking institutions in crypto can now have services towards the institutions who want to involve in the cryptos. Predictions are maybe not necessarily correct. The blockchain-based and crypto asset-oriented AI agents expect to be emerge as a major trend. Also, some price predictions. Also, by this year, at least 3 additional crypto assets will be approved as ETF. And also, real-world asset and stability. Stablecoin will become the most closely monitored area for the traditional institution alongside with the risk of institutional DeFis. But also some risk. So if the probability of US session rises significantly, and second, traditional investors, institutions are less interested in the crypto. And 3, policy easing fell short of expectations. And 4, buying funds dried up. But people pay attention to the recent tariff issues. But as Michael Saylor has been saying that there's no tariff for the Bitcoin. So Bitcoin may be a hedge for the current chaos situations. That's all my sharing. Thank you. Thank you for joining us.